Good afternoon, everybody. It's 1 p.m. and we're going to get started with the CRC webinar this afternoon. I want to welcome everybody to the webinar. My name is Craig Thiel. I'm the Research Director at CRC. Today we're going to discuss our most recent report on the topic of special assessments in Michigan, a topic that we've been following for multiple decades. And if you answered the phones in the Lansing office or the Livonia office any month of the year, you know why we're digging into this topic, because we get quite a few questions on special assessments across the state. And we felt like it was a topic that we needed to breathe a little life into and take a more current look at the use of special assessments and specifically how they relate to property taxes in the state. First, let me introduce you to the Citizens Research Council. We are a statewide, nonpartisan public affairs research group. We're celebrating our 103rd year of operation this year. Longevity we attribute to our promotion of sound public policy for state and local governments through accurate, independent, and objective research. We are a private, not-for-profit entity, and we rely on the charitable contributions of foundations, businesses, and corporations. I'd like to encourage all of you to join our circle of supporters and help us to continue to provide the high-quality, independent information on important policy topics. You can learn more about CRC at www.crcmich.org. At the bottom of our website, you'll find an opportunity to sign up for our email distribution list to keep up to date on our reports and upcoming events. Be assured we don't share our distribution list, and you can unsubscribe at any time. Please note that we are recording this webinar and we'll post it up on our webpage where it will be available for future viewing along with the slide deck. Secondly, we have everyone but our presenter on mute, so we're not going to be able to hear you if you speak. However, we do have an opportunity for you to ask questions during the webinar, and we encourage you to do so. Type your question into the question pane that should be appearing on the right-hand side of your screen. I can monitor those as the presenter is going through her comments, and we'll address those at the end of the presentation, but you can type those questions in anytime that you'd like. If for any reason you have any technical problems during the webinar, please call us in Lansing at 517-485-9444, or just put a comment in the questions pane and I'll be able to monitor it that way as well. Finally, after the webinar, we'll be sending an email soliciting your feedback, and we'd ask very much for your candid thoughts on our presentation this afternoon, as well as our report, and to make our products in the future better. Today's webinar is going to be discussed by Jill Roof. Jill's been with the CRC since 2004 and has had multiple assignments. Currently, she is our primary research lead on local government issues. She was the author of our report that we're discussing today. And Jill, I'm going to turn it over to you and take it from here.
Thank you, Craig. As Craig said, my name is Jill Roof. I am a research associate with the Citizens Research Council of Michigan. I'm happy to be here today over the internet talking with you about a topic that I think is truly very interesting, though it has a somewhat boring sounding name, ad valorem special assessments. So let's start by talking about property taxation in Michigan. Michigan local governments rely heavily on the taxation of property to fund services, infrastructure, and capital improvements. The ad valorem property tax, ad valorem comes from Latin and means to the value, is the tax that most people are familiar with. It is used by all types of local governments to fund various services. In addition, local governments apportion special assessments on parcels of real property within limited geographic areas that benefit from capital improvements, such as street paving or lighting, water service, sewers, things like that. Special assessments are based on the concepts of need and benefit and are generally apportioned on the basis of front footage, land value, or some method that can be reasonably connected to the benefit received. In recent years, local governments have increasingly turned to a revenue-raising device called the ad valorem special assessment, a type of special assessment apportioned on the value of property similar to the ad valorem property tax. Rather than capital improvements, these special assessments are generally used to fund specific government services like public safety, and they are typically levied unit-wide. This figure highlights the main types of property taxation in Michigan, some of which we just discussed. They can overlap and range from general property taxes to traditional special assessments. Like I said, all types of local units levy a property tax for general operations, represented by the far left circle. Many local units also levy traditional special assessments on real property as well, the far right circle. Dedicated property tax millages fund particular services and are authorized in state law to allow counties, cities, villages, townships, and special authorities to levy millages for specific purposes, such as transportation. Ad valorem special assessments are legally considered assessments, but they are typically levied throughout an entire jurisdiction and are based on property value in a similar manner to property taxes. Not all local units are authorized to levy these. So let's start the deep dive into taxes and assessments by talking about the legal distinctions between special assessments and general property taxes, which are spelled out in case law. In a case from 1929, Blake v. Metropolitan Chain Stores, the Michigan Supreme Court provided some standards for special assessments, including that they can be levied only on land, they cannot be made a personal liability of the person assessed, they are based wholly on benefits, and they are exceptional as to both time and locality. The court further specified that a charge on all property, real and personal, in an area is a tax and not a special assessment, and a charge imposed only on property owners benefited is a special assessment and not a tax. Since this ruling, the taxation of personal property has experienced significant changes, with a lot of personal property being exempted from the general property tax. In another case, in Bolt v. City of Lansing in 1998, the Michigan Supreme Court defined a tax as follows. It is levied to raise revenue for the general operation of government, it is levied to benefit the general public, and it is compulsory in nature. So these provide some standards for what are special assessments and what are property taxes in case law. Some conflicting court rulings have upheld ad valorem special assessments despite these differences defined in case law. One court reasoned that they must pass muster because they are not levied on personal property. Another court approved their use and stated that an ad valorem basis for determining the benefit of a fire department was fair. These rulings seem to defer to the legislative intent in passing state laws allowing for ad valorem special assessments, rather than to analyze whether the levies in question met the requirements in case law to be considered assessments rather than taxes. This table highlights the differences between general property taxes and traditional special assessments and shows how ad valorem special assessments are in some ways like taxes and in other ways like assessments. General property taxes are subject to numerous constitutional and statutory restrictions that special assessments are not subject to, including constitutional requirements for uniformity in assessment and equalization, rate and base limitations, such as the Headley Amendment in Proposal A of 1994, and the statutory processes for appealing taxes and assessments, which are different. Special assessments are levied on all real property, including property normally exempt from taxation, such as churches, hospitals, nonprofits, that kind of government or nonprofit type property, unless that property is exempted in the authorizing statute for the special assessment, as is the case for Act 33 assessments, which we'll discuss in detail a little later, for public safety, which make up most of the ad valorem special assessments that are levied. So these Act 33 assessments do exempt property that is exempted from the property tax. Special assessments are levied only on real property, not personal property. The exemption of personal property from special assessments has served to shift part of the financial burden of taxes and assessments to residents and real estate owners from businesses, because businesses pay more taxes on personal property. This was a critical distinction prior to the personal property tax reforms of 2012. These reforms have eliminated much of the tax on personal property and tempered this shift. As the table shows, ad valorem special assessments, while considered assessments, are levied like taxes in some key ways. They tend to be unit-wide and to support general services like public safety. They are generally levied on taxable value, which is a modified acquisition value created by Proposal A, rather than being levied on state equalized value, which is 50% of true cash value and reflects market value. So why are ad valorem special assessments a problem? Local governments are levying ad valorem special assessments instead of general property taxes because state law limits the general property tax, but has broadened the purposes for which ad valorem special assessments can be levied beyond the construction and maintenance of public improvements to include basic governmental services. Furthermore, local units can levy these without voter approval, though they do require public notice, and some local governments do put them to a vote. This legislative action has had the effect of eroding the connection between special assessments and the special benefits created by public improvements, which in turn undermines the distinction between special assessments and general property taxes. Essentially, ad valorem special assessments provide some local governments with additional taxing authority that is not available to all local units. This taxing authority is not subject to the tax limitations in state law. This is unfair to other local governments that are supporting the same general services through property taxes. It is also unfair to taxpayers as their use circumvents tax limitations under state law and distorts the purpose of the special assessment. Appeals of assessments can also be more difficult for taxpayers to pursue than appeals of general property taxes. This is not a new problem. In 1983, the Citizens Research Council identified 87 ad valorem special assessment districts that were generating at least $18 million in revenue. In 1995, the total was 147 districts with $55.5 million in revenue. And by 2018, the total reached 246 districts with $195 million in revenue. Those 246 districts were levied by 192 local governments. This number is lower because some local units levy multiple special assessments. This represents about 11% of all cities, villages, and townships in the state. For the most part, previous recommendations made by the Research Council to address the use of ad valorem special assessments have been ignored by state and local policymakers. Local officials are using ad valorem special assessments to meet immediate funding needs, allowing the state and local officials to avoid addressing the hard issue that the municipal finance system has major problems in terms of its general structure and the revenue options available to locals. Many local governments seek options beyond the property tax and revenue sharing to meet taxpayers' demands for services. However, ad valorem special assessments are not the answer to the municipal finance problem. The big problem with ad valorem special assessments is that they lead to different local governments funding the same types of services differently under different laws and requirements. Most local units pay for fire and police and other general government services through the adoption of an ad valorem property tax that is levied on real and personal property and subject to voter approval, as well as constitutional and statutory restrictions on the tax rate and duration. A limited number of local governments are authorized to fund the same general services through an ad valorem special assessment that is levied only on real property, has different authorizing and reporting requirements, and is not subject to the constitutional and statutory restrictions on their levy. The case law is replete with the requirement that special assessments can only be levied when the property specially assessed receives a benefit from the improvement differing from the benefit to the general public, and that the linkage between assessments levied and benefits received must be clear and direct. These unit-wide special assessments are supporting municipal operating services for which the general public has the opportunity to benefit equally. Additionally, the average taxpayer probably cannot differentiate whether they are paying a property tax or an ad valorem special assessment, which raises a serious concern about treating them differently under state law. In 2018, as I said, we had 246 unit-wide special assessments levied by 192 local governments, generating $195 million in revenue. Police, fire, and public safety equipment and services are the most popular purposes for which ad valorem special assessments are levied by far. Of the 246 special assessment districts, 90% were created to fund some type of public safety purpose. Additionally, 97% of the revenue raised by these assessments goes to some type of public safety purpose. Public Act 33 of 1951 allows townships, villages, and qualified cities, which are generally defined as small cities, they're limited in size, to levy these ad valorem special assessments for public safety services. In the case of these Act 33 assessments, some of the legal distinctions that remained between ad valorem assessments and property taxes have been removed by statute, such as Act 33 assessments must be levied on taxable value like property taxes, and they also exempt property like the nonprofit government property that is exempted from the property tax. Thereby, these eliminate any real distinguishing characteristics between these ad valorem special assessments and property taxes. This slide highlights the type and location of local governments that are levying ad valorem special assessments. 84% of all ad valorem special assessments are levied by townships. This is because townships are authorized to levy them in state law, whereas only selected cities, generally small cities, are authorized to levy them. The map shows that almost half, 46% of all ad valorem special assessments were levied by townships in small villages and cities in 8 counties across the state. These are represented in green on the map. The remaining 54% of local governments levying these assessments were located across 45 counties. 30 counties, represented in white, do not have any local units levying ad valorem special assessments. As the map shows, these types of assessments are used extensively in Southeast Michigan, but also in much less dense counties such as Van Buren County in Southwest Michigan. The average ad valorem special assessment millage rate in 2018 was 2.2 mills. Of 192 local governments that levy these type of assessments, again, this number is lower than the total number of assessment districts, 43%, mostly townships, levy more mills in assessments than in general taxes. The city of Ecorse in Wayne County levies the single largest special assessment at 22.3 mills. Tuscarora Township in Sheboygan County levies the lowest special assessment at 0.04 mills. And Royal Oak Township levies the most special assessments, 4 millages totaling 19.75 mills. But another 43 local governments levy more than one special assessment millage. While the cities that are levying ad valorem special assessments are small per state authorizing legislation, some of the charter townships are quite large and can operate like decent-sized cities. Clinton Charter Township in Macomb County has a population of almost 100,000 residents and levies 5.5 mills in property taxes and 9 mills in special assessments. Canton Charter Township in Wayne County has over 90,000 residents and levies 2.8 mills in property taxes and 9.5 mills in special assessments. This table provides other examples of townships that levy more mills in special assessments than property taxes as well. This table highlights cities and townships that appear to have property taxes close to their limit and may have adopted ad valorem special assessments to secure more taxing authority. With respect to cities, most have higher general operating millage rates, but that does not preclude them from having high special assessment rates as well. Ecorse and Saginaw are the only 2 cities with a higher assessment millage rate than tax rate. Tax limitations can vary depending on state law and city or village charter, but this table includes cities that have a combined millage rate over 20 mills and townships that have a combined rate over 10 mills. Some local governments appear to have maxed out on the property tax levy. Others maintain fairly low property tax rates, but have exceeded the property tax limitation when combined with their assessment rate. A note to remember that these property tax millages do not include debt millages, which are unlimited and do not count against millage limitations. The increased use of Act 33 assessments is largely responsible for the growth in special assessments statewide. In recent years, Act 33 has been amended to provide that special assessments be levied on taxable value rather than state equalized value, which is 50% of true cash value, and that all property exempted from the property tax be exempted from Act 33 assessments. These changes have served to make Act 33 assessments even more like property taxes and easier to levy. They do not require a vote of the people, though some local units might put them to a vote. Once a local government levies an ad valorem special assessment for public safety purposes, it allows general property tax revenue that previously supported public safety to be reallocated to finance other services. Furthermore, these assessment levies are not subject to Headley rollbacks, which gives them greater long-term growth potential than general property taxes, whose rates are rolled back when they increase faster than the rate of inflation, excluding any new construction added to the unit. Another potential reason for the increased use of ad valorem special assessments is the fiscal challenges that have been created for local units of government due to Michigan's economic challenges throughout the 2000s. Decreases in state revenue sharing, the graph shows state revenue sharing over the years. Losses total more than $8 billion since 1998, coupled with declining property tax revenues due to property value declines during the Great Recession, have contributed to a municipal finance crisis in Michigan. Despite this municipal finance crisis, ad valorem special assessments should not be maintained in their current form. Special assessments should be levied only for recouping costs that increase the market value of specific properties. They should not be levied unit-wide, and they should not support general government services. General government services should be funded by general taxes. If the property tax is not sufficient to meet the needs of local governments, then the bigger issue of the inadequacy of the local government finance system needs to be addressed. The first recommendation in our report to eliminate statutory authorization for all unit-wide ad valorem special assessments is not a new one. We originally made it in our 1997 report on the same topic. In order to fund general government services, local governments should be required to levy ad valorem property taxes or other taxes authorized by state law. Current taxes authorized to local units include property taxes for townships and villages and property or income taxes for cities. Property taxes which subject the levies to voter approval, as well as constitutional and statutory restrictions. It would give property owners more rights to appeal the levies. It would also make ad valorem taxes easier to track by making the general property tax the sole method for raising funds. This recommendation does not call for the elimination of traditional special assessments, which are levied for specific capital improvements, are apportioned on front footage, land area, or land property value, and are not levied unit-wide. When fire and police services, for example, are financed from general property tax revenues, local officials are forced to balance these as well as competing priorities against the availability of revenues. This process of allocating limited resources among competing demands is the essence of public budgeting and is an integral part of determining local priorities. The fact that local governments may not be able to replace lost special assessment revenue should not be dispositive, because no local government should enjoy a perpetual right to levy unlimited taxes. That being said, it should be recognized that these unit-wide ad valorem special assessments are funding essential government services, police, fire, public safety, that cannot just be eliminated because their funding source has been withdrawn. Some townships levying these assessments are levying very low property taxes and have room within tax limitations to raise more property tax revenue with voter approval. Other townships that are at their taxation limits could look into adopting a charter and becoming a city. Despite these options, various property tax limitations have made identifying and enacting replacement revenue difficult. This recommendation should not be implemented in isolation without identifying alternative means of financing these essential services. Since the majority of ad valorem special assessments are levied to fund public safety services under Act 33, our second recommendation is to encourage local governments to establish police and fire authorities, a process for which is provided in state law. In order to form a public safety authority, it would require local governments to join with other local units to create multi-jurisdictional authorities. These authorities could then levy property taxes with voter approval, keeping the local governments from having to levy property taxes themselves and coming up against their tax limitations. Establishing public authorities is a good option for a number of reasons. One, they are subject to voter approval and need voter approval to levy property taxes. Two, they are subject to some constitutional property tax limitations, although they are not subject to the 15, 18, or 50 mil tax limitation found in the Constitution. And three, they are multi-jurisdictional, which leads to services being provided across a larger geographic region and can lead to efficiencies and cost savings. And the third recommendation in our report addresses the big elephant in the room, the problem underlying many other problems at the local level. The municipal finance system is broken. Local governments do not have enough revenue options, and revenue and service delivery structures need to be more regionally focused. With state revenue sharing severely underfunded and recent declines in property tax revenues, ad valorem special assessments have been like a life preserver for some local units. However, the fact that local governments have limited revenue options and need to fund public safety services does not justify the implementation of bad policy. If the property tax is not sufficient to meet own source revenue needs, then local governments need more revenue options. Additionally, the state and local officials should take a close look at the municipal finance and service delivery system, which hasn't changed much since the 1800s, despite advances in transportation, communication, and technology. The first part of this recommendation to rethink the municipal finance system includes authorizing new local option taxes. The Research Council recently released a report that goes into detail on local taxes in Michigan and options for expanding them, called Diversifying Local Source Revenue Options in Michigan. This report found the property tax is insufficient as the sole revenue source for local governments. High property tax rates are burdensome to taxpayers and generally unsustainable. Allowing local units that are struggling to meet their revenue needs to levy ad valorem special assessments just serves to raise the overall property tax burden on residents. Local option taxes discussed in the report include sales or excise taxes, income, sin, transportation, and other taxes. Some types of taxes would be easier to implement than others. Some types are better fits in some communities than others. But the overall message of the report was that Michigan is an outlier and needs to provide its local units with more taxing opportunities. Authorizing more local taxes just provides more options for local officials and voters. No new taxes can be implemented at the local level without voter approval. One of the key findings of the research into local option taxes was that these are best levied at the regional level rather than the most local level. If the state authorizes new taxes to cities and townships, it could introduce economic distortions by allowing individuals and businesses to adjust their tax burden fairly easily by changing the jurisdictions in which they live and do business. Authorizing at the most local level could also intensify competition and socioeconomic disparities across local units. Many of these concerns can be addressed by levying new taxes at the regional, such as county, level. In related policy, the Research Council has supported a push for greater county service provision and regional service delivery. While it is true that local units need more revenue options, it is also true that many services can be provided more efficiently at the regional level. Coupling new regional taxes with regional service delivery at the county level might help to eliminate the need for ad valorem special assessments. In 2017, the Research Council released a report called Counties in Michigan, an Exercise in Regional Governance, that found that the precarious financial condition of local governments could be at least partially addressed by expanding regional governance at the county level. We identified a number of service categories that could benefit from county provision, including information technology, administration, tax collection, property assessment, and public safety, among others. Counties are well suited to provide services to residents of townships and smaller municipalities and to partner with larger municipalities to maximize economies of scale so services can best be provided to benefit residents. Ad valorem special assessments are levied largely by townships providing public safety services. If these services were provided at the county level, it would free up the townships from having to provide these through the ad valorem special assessments. Townships and small cities could focus their funding and efforts on placemaking and attracting residents to their communities, while the county could provide many back office functions and other services. It may sound scary to give your local police functions to the county, but if a county provides police service to all the townships within it, each township could still have specific officers dedicated to their township and their patrol so that they become part of the community. The only difference would be that they would work for the county and the back office functions would be provided by the county. In conclusion, the problem identified in this paper is not with all special assessments, just the hybrid ad valorem special assessment that is levied like a tax but regulated like an assessment. Traditional special assessments, some of which may be apportioned based on property or land value, have a place in the municipal finance system. They are an acceptable financing tool to provide needed capital improvements within local governments, or more accurately, within portions of local governments. General government services, however, that are provided unit-wide should be funded from general tax revenues. The Research Council has addressed this issue in the past, in 1983 and again in 1997, and little progress has been made on any of our suggested remedies. Despite our admonitions against ad valorem special assessments, their use has only increased. They have become a band-aid for local units that allow state and local officials to avoid the hard issue of the broken municipal finance system. Addressing this issue will require state and local officials to rethink how government is structured, how it is financed, and how services are provided. The three general recommendations made in this report: 1, eliminate statutory authorization for unit-wide ad valorem special assessments; 2, establish police and fire authorities; and 3, rethink municipal finance and governance with new local option taxes and regional service delivery, reflect this need to address the overall municipal finance system. They are not mutually exclusive and can be pursued concurrently. Ultimately, state policymakers need to restructure the municipal governance system to provide regional governance, adequate revenue, and efficient services. If local units had adequate revenue systems and were required to provide services regionally when possible, unit-wide ad valorem special assessments would no longer be necessary. And that concludes my presentation. I appreciate your time and listening, and am happy to answer any questions that you may have.
Well, thank you very much, Jill. Great presentation, very informative. I do want to encourage folks, there's still time to write up a question. If something comes to you after we end the webinar today, you can reach out to us and we'll answer your question offline. A couple questions did come in, and I'll throw them out to you, Jill. First one was a data question. I think you answered it. The millage rates that were presented with respect to general property taxes excluded debt millages. So that was just operating property tax millages in the tables that you had. Is that correct?
Yes, we went through the data and pulled out debt millages. So the tables and the data should just include operating millages for cities and townships.
So that would be a apples to apples comparison then in terms of operating revenues available local. Another question came in about your recommendation number 2. It seems that you're calling for more government by authorizing these authorities in place of the special assessments that a township would be levying. Can you comment about that?
Sure. Technically, creating another authority is creating another level of government. But what our research has consistently been saying over the years is that we need to regionalize more service delivery. Our methods of transportation and communication have improved so much that we don't need to be so local providing services to residents. So while a multi-jurisdictional authority is a new government, it is providing a service like police or fire over a larger region, which would allow hopefully for more collaboration, consolidation of service, and efficiencies. And basically taking that service away from the most local level and providing it hopefully more efficiently at a regional level.
Another question came in on the recommendation related to revenue options, and the question being, if local governments are strained on the number of options available to them to satisfy service demands, why take this one away?
That's a good question, but we do, our research, we just did released a paper in 2018 on local source revenue options, and we did find that local governments are constrained in their revenue options, certainly when compared with other states, and certainly just it's contributed to problems at the local level. However, the fact that local units have limited revenue options doesn't mean we should give them a bad revenue option, or we should allow them to implement what we consider to be a bad policy. We think that the municipal finance system should be fixed, and that locals should have revenue options that fit within constitutional and state law and case law, and can meet taxpayers' demands for services. Like before too, talking about regionalization, we also think a lot of services could be provided more regionally. When local government was formed in the 1800s, we needed it to be much closer to the people, but now a lot of these services could be provided more regionally, and couple that with regional taxes that are beyond just property taxation, which can be burdensome to residents, so that you have sales type taxes, income type taxes, excise taxes, just more options would be beneficial, not what we consider a bad option that increases the property tax burden on residents.
Well, that exhausts the questions that we received. So I'll just remind folks that are still on with us that you're going to be receiving an email soliciting your feedback about the webinar. We'd really appreciate your comments and feedback on the content we provided today. I'd also want to remind you that the report that we discussed today is available for download on our website. The full report, as well as a shorter summary, is available on our publications page, along with an infographic to try to distill the main findings from our report into a one-page summary. And the slide deck and the webinar will be posted later today to share with your networks and colleagues if you feel like they will benefit from the material we presented today. So with that, thank you for attending, and we look forward to your engagement with CRC in the future.